Should you choose a cash ISA or a stocks and shares ISA? Hi, I'm Jasmine from Redwood Financial. We're a family-owned and run chartered financial planning and estate planning firm based in Hampshire, and we've been helping clients in this area for over 20 years. So the difference between a cash and a stocks and shares ISA, well, let's get into it first. In terms of which one's best or which one should we use, we need to understand the differences. So a cash ISA, probably self-explanatory, but it is an ISA that is invested in cash. Typically, you will take your cash ISA out with a high street bank or building society that you bank with. Now, a cash ISA is an absolutely perfect place for your emergency fund, your short-term monies that you need to be able to have instant access to in the event of an emergency, and that's a great use for cash ISAs. A stocks and shares ISA, completely different to a cash ISA, is actually an ISA that's in an investment portfolio. So we're going to have a collection of cash, bonds, stocks and shares inside that investment portfolio. And a stocks and shares ISA is designed to achieve longer term growth on our money over and above inflation. And that's why for a stocks and shares ISA, really the most appropriate thing for investing in one of those is longer term savings. So if we're saving for our retirement or a future need that at least is 5 years down the line, that would then lend itself more to a stocks and shares ISA versus a cash ISA, which is perfect for short-term money that you need to get your hands on very quickly. Or perhaps if you're a younger person and you're saving up to buy your first property, a cash ISA is going to be great because you don't want to run the risk of the market going down. You want to keep that cash ISA nice and steady whilst you're then looking to buy your first home. So it's about understanding what's the investment goal, what's the investment objective, and then that typically then tends to tell us whether or not a cash ISA or a stocks and shares ISA is going to be the best way to go. Where we see common mistakes that most clients make, though, is that they end up building up their cash ISAs over several years, maximizing the allowance, 20,000 every year. And before you know it, several years later, they've maybe got 100,000, 200,000 invested in cash ISAs. And that was never really the intention of a cash ISA, to hold that level of wealth for that longer period. When you think about it, the average interest rate on a cash ISA is going to vary somewhere between 2 to 4%. And for a lot of cash ISAs, even less. And that's not even going to be keeping pace with inflation over the medium to long term. Whereas an invested ISA that's well invested in a diversified portfolio should be doing on average at least as a minimum 5 to 6% per annum over the medium to long term. So if we're saving for the long term and we really want to make sure that our funds are growing, it makes sense to use a stocks and shares ISA that's that higher growth environment. And when you think about it as well, we have these tax-free allowances that give you tax-free growth. It makes sense we therefore want to maximize the growth as much as possible to get the maximum benefit from those tax-free allowances. So that's why for longer term savings, stocks and shares ISAs are going to be the way to go. And it's really only for your emergency fund and your short-term funds that you should look to use your cash ISAs. If you have any questions, then you can contact us for a complimentary callback with one of our advisors who will be happy to answer more questions that are tailored to your needs. But you can also check out our website. There's got lots more information on the differences between the ISAs and how to make sure that you've got the right one for you and your circumstances.